Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 168 on May the 29th, 2021. I'm your host, Eric, and in this week's show, we will cover trades from last week on Attosa Therapeutics, American Airlines, and Vale. And we discuss three new trades on Akerna Corporation, the Ford Motor Company, and Blackberry. And it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the U.S. equity markets finished slightly higher this week, with both major indices gaining roughly 1%. The Dow Jones Industrial Average picked up 321 points, closing at 34,529 points on Friday. The S&P 500 index gained 48 points, ending the week at 4,204 points. Now it's time to get into the topic of the week. The topic of the week this week is winning in options but missing on a stock trade. Now, back on May 14th of this month, 2 weeks ago, May 14th, I pointed out some in-the-money call spreads on AMC Entertainment. I actually bought two of those spreads. One of them expires on June the 18th, and I bought another one that expired May 28th. I paid 26 cents for the May 18th spread. It was a 12 and a half call spread. Paid 26 cents for it. I made 24 cents on that spread as of yesterday, picking up a 92% return on capital. I should be happy, right? Well, if you look at what happened in AMC stock, I actually would have picked up a much higher return on the stock itself over the last 2 weeks. Now, the emotional side of me is irrational, right? It wants the full value. I don't want part of the run. I don't want a 92% return. I want 100 and whatever percent return. Some people would use that even as justification to only trade the stock and not options. However, the rational side of me knows, and that's the trading side of me, that this trade paid off well because the numbers were in my favor. I can't predict a stock rally or, the next Wall Street Bets bubble. This is proof that even on a win, you can find a way to beat yourself up. I mean, I literally look at AMC stock and I'm kicking myself for not just loading up on the stock, predicting the market correctly. And we all know, when you put it in those terms, you're not going to predict the market, right? So I just want the numbers. I want the numbers to line up, and I want to take on trades that have the risk parameters that I'm looking for. And, ultimately, this is the mental game of trading. I mean, you can beat yourself up for losing. You can also beat yourself up for winning. I got exactly what I wanted on the AMC trade: limited risk and an outside return. So I am walking away this weekend high-fiving myself a little bit on that trade and the other one that should finish in the money in a few weeks. So now, if any of you has a crystal ball that works for stock market predictions and you're up for selling it, let me know. I'm sure we can cut a deal. Otherwise, I'm going to just stick to the numbers and keep trading the way that I trade. And my goal is to win in the long term. So, and math is helping me do it. All right. That's it for the topic of the week. Hopefully a few of you guys got into that AMC as well, worked out well, and maybe a few of you even picked up the stock. So congratulations if you did. I did not. Let's get into the trades from last week. We start off with the covered call on Attosa Therapeutics, symbol A as in Alpha, T as in Tango, O as in Oscar, S as in Sierra. Stock ended, or at the time, the stock was trading for $3.25 per share. I looked at buying the stock and selling that June 3.5 call at 70 cents which should give us a maximum possible 9.23%. Now, Attosa Therapeutics stock finished the week 3 cents lower, closing at $3.22 per share. The call option we sold lost 30 cents, leaving us with a net profit of 27 cents for the week if we were to close the trade. Now, with such a small amount of movement in the stock, there really isn't any need to make an adjustment at this point. If the stock stays in this range over the next 3 weeks, this position will still lock in a 20% profit on the premium collected alone. If you did close the position this week, you'd still be locking in an 8% return on the week just because of the amount of money that call option fell. So overall, this trade is working, and I'd just let it ride out. Keep an eye on the stock, obviously, but I intend to let it play out. No adjustments needed. Our next trade last week was a credit spread. We looked at American Airlines, symbol A as in Alpha, A as in Alpha, L as in Lima. At the time, the stock was trading for $22.60 per share. I looked at selling the June 22-21 put spread at 33 cents, which could give me a maximum possible loss of 67 cents per spread. Well, American Airlines stock rose $1.64, closing the week at $24.24 per share. The out-of-the-money put spread we sold is even more out of the money now, and if you were to buy the spread back today or on Monday, you'd actually lock in a 19-cent profit. Of course, if stock stays in this range for a few more weeks, we'll capture the full option premium that we collected when we sold the spread. So this trade is working out as well. No adjustments are needed. And then just so we can go 3 for 3 this week, we had a debit spread last week on Vale, symbol V as in Victor, A as in Alpha, L as in Lima, E as in Echo. At the time, the stock was trading for $21.07 per share. I looked at buying the June 2021 call spread, paying 66 cents for the spread. That can give me a maximum gain of 34 cents or a 51.5% return on my capital in three more weeks, or in 4 weeks at the time. So Vale stock grew 45 cents, ending the week at $21.52 per share. The in-the-money call spread we bought is now even more in the money. If you were to sell the spread at the posted bid-ask, you would collect an additional 6 cents, which I guess would be a 10% return on capital or even 18% of the expected profit. But if stock stays above $21 per share, we'll lock in our full expected return of 51.5%. So I wouldn't advise personally get out of that stock or out of that spread just yet. I'm going to capture that whole return and keep my eye on the stock. So for me personally, no adjustments are needed. Obviously, if you decide to trade any of these alongside with me, only trade if it fits your risk profile, but you have to manage the position according to your risk levels as well. So all I do on this show is share kind of my mentality, my process for thinking about them. And what you're really hearing is my risk assessment for my account. So that's all to say, you have to trade your own account personally because it's your money. I do not give advice, but I do at least like to share my thoughts on my portfolio. So let's get into this week's trades. And all of the trades this week are using the June 18th expiration for options. That's the monthly expiration. So they've got 3 weeks left to perform, 3 weeks to make me some money. All right, we're going to start off with the cover call. Looking at Akerna Corporation, symbol K as in Kilo, E as in Echo, R as in Romeo, N as in November. The stock ended the week at $4.38 per share. I'm looking at buying stock and selling that June 5 call at 45 cents, which gives us a maximum return of 24.43% in 3 weeks. You would enter this trade by buying stock for $4.38 per share and selling the June 5 call at 45 cents. This trade makes the most money if stock prices finish above $5 per share, and the break-even price on this trade is $3.93 per share. So in real terms, the stock purchase would require $438, and you would collect $45 for selling the option. And the thing I like about doing some of these lower priced, lower price call spread or covered calls is that the price of the stock itself is basically the price of an option trade. So you can still get great percentage returns without having a significant amount of capital at risk. All right, our second trade on the week is going to be a credit spread looking at Ford Motor Company, symbol F as in Foxtrot. The stock ended the week at $14.53 per share. I'm looking at selling the June 14 put spread at 21 cents, which can give us a maximum possible loss of 29 cents per spread. Now, you enter this trade by selling the June 14 put at 56 cents and concurrently buying the June 14 put for 35 cents. This is a credit spread because the trade makes the most money if stock prices remain above $14.50 per share. The break-even price on this trade is $14.29 per share. Now, in real terms, you would receive $21 per spread that you sell and have $29 at risk. Our final trade on the week is going to be a debit spread looking at Blackberry, symbol B as in Bravo, B as in Bravo. Stock ended the week at $10.07 per share. I'm looking at buying the June 9/10 call spread, paying 22 cents for that spread, and having a maximum possible gain of 28 cents, which is a 127% return on capital. Now, you enter this trade by buying the June 9/2 call for $1.30 and concurrently selling the June 10 call at $1.08. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices stay above $10 per share. Your break-even price on this trade is $9.72 per share. In real terms, you'll pay $22 to enter the spread, and your maximum gain is $28 per spread. And that right there is yet another spread where the math just works. I'm definitely willing to spend $22 to try and make $28. Like that it shouldn't happen. And this is a 3-week long trade. So this once again, and this happened in AMC and this has happened throughout the year. You just have to do the math. So this is why I say knowing options is important for every investor. Every investor, if you told your broker, if you told your advisor, you told your family, anyone that's in the market that you've been, you're doubling your money, right? Doubling your money in the markets, they'd probably think that you're trading crypto or that you're one of these Wall Street bet guys and or that you're taking oversized risk and an amazing amount of leverage that you don't understand. The truth of it is, this is just options and just doing the math and looking for situations that possibly make sense. So sure, I could lose $22 on that trade, but I also could double my money. And that is why I like trading options. So that's it for the week. Thank you guys so much for listening. Please do continue to share the show with friends who are also in the market and want to have a little bit of an advantage with math. All I do is do simple math. I mean, it's straight out addition and subtraction every week. So you guys definitely can do the same. And I know many of you are because you email me. So thanks for emails. And I am behind on responding to emails. So please accept my apologies. Life's been a little crazy lately, but it's been a good kind of crazy and not a bad. So that's it for this week's show. Don't forget to check out the YouTube channel later. I'll be posting a video so that you can watch. You can get a more visual explanation of the trades that I mentioned on today's show. And that's it. Have a wonderful weekend. Happy Memorial Day. Don't forget that U.S. equity markets are closed on Monday, so we'll be back at it on Tuesday. And as usual, happy trading.
Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. Disclaimer, visit our website at www.theweeklyoption.com.